All right, as we enter a whole new day in trade, let's take a look at how the global handover panned out from last night. Now, if you looked at the US markets yesterday, they were quite scary. The Dow was down nearly 1,000 points, or 900 points at one point. This was around 10 p.m. India time. The Nasdaq was down 200 points. The S&P was also down around 2%. And the outlook was looking pretty grim. However, when you look at how the markets panned out this morning, while they did definitely see some pressure, there was a bout of recovery. The Dow recovered almost 500 points to end the day only 500 points down. The Nasdaq ended the day flat, which was down over 200 points. And the S&P lost just 1.2% versus the 2% it was down in the beginning of the session. So definitely a recovery scene. Futures on the Dow currently, as we speak, are up around 50 points. S&P futures are up around 0.4%, and Nasdaq futures were up around 0.5%. So we could be in for a bit of a bounce back, but let's see. It might be too early to say that. We'll have to see how the US markets pan out over the rest of the week. Now, coming forward to Asia, Japan is on holiday yet again today, so this will be the second day we have no cues coming out of Japan. However, we can get cues from some of the other countries. So looking at the Kospi in Korea, it shed 0.26% in early trade. In Australia, the ASX 200 dipped 0.43% in early trade. So overall, the MSCI index ex-Japan was just 0.11% lower. So it'll be interesting to see how Japan opens tomorrow when it finally does, and that'll also provide some cues for the Nifty over here. Now, European stocks closed sharply lower yesterday. There are allegations of bank misdealings and rising COVID-19 cases. So the pan-European stock 600 was down 3.2%, quite a large fall. Banks were one of the main losers here, 5.7% down. Also, your travel and leisure stocks, once again, 5.2% down. So that pocket really suffering. UK government officials have warned that COVID cases could touch 50,000 per day in October unless something is done very soon. So that's what's got those markets spooked for now. Oil prices, on the back of all these COVID-19 cases and demand outlook weakening, actually fell 4% yesterday. So this demand outlook when you have rising COVID cases is not good. Also, Libyan production is apparently going to start up again, and that might create some oversupply. So that also is a bit of an issue. So Brent was down $2 or 5% to $41. WTI was down nearly $2 again, or 4.38% to $39 a barrel. And both contracts were set for their biggest daily drop in 2 weeks. Finally, gold not acting as a hedge to equities. Yesterday we see quite a different move, because usually when equities are going through volatile patches, safe haven metal tends to do well. Yesterday gold slumped 3%. This is because uncertainty over the next round of US stimulus, as well as a stronger dollar impacting prices. So silver also, funnily enough, fell 8.3% yesterday to $24, and its lowest in a month. Spot gold fell 2% to $1,909 per ounce. US gold futures settled down 2.6% at $1,910 per ounce. So we might just breach 1,900. Keep your eyes out for that one, which will be a sharp reversal from the high we saw not too long ago of above $2,000 for gold.